Let's put my money where my mouth is. And a warm welcome to one and all. If this is your first time here, I am the coffee obsessed Scruffy Trader. And it must be so. It says so. Right here. And that's right. You all know Scruffy likes a coffee. And he does. But he also likes kind of backing up what he says. And I know that's a strange thing to say in the world of make-believe, or what you call Instagram. I back everything up I say. So what I'm going to do is I'm going to fire up the pound JPY, and I'm going to trade the chart as I see it, but I'm also going to use the indicators I used yesterday on the DAX, because I had a bit of a backlash because I made 130 quid. Well, I actually made 138 quid in about 5 minutes, and some people didn't like that. They were sort of saying, yeah, you shouldn't say that. Well, it happened, and it was done live in front of you, so I don't quite get what the meaning was. I try to show trading in the real world based on my account. Now, I have a reasonably large account. I can trade up to easily £20-25 a point, and if it runs against me, I can easily bear heat to the tune of 1,000 to 1,500 before I start getting a bit twitchy. And why? Because it's all in relation to the account size. Now, if you watch me when I'm doing Morningstar, again, that is account size. It's down to sort of like 50p and £1 a point because it's tiny. And there's a reason I'm not doing it this week. It's because I can't gauge the markets for the stretch points. And when you have a stretch point that is too big for your account, just stay out. It's that simple, because you can't ride the noise out. And I've often said it before, one of the best positions you have is sitting on your hands, because all I'm looking to do each day is trade once or twice, get my wages and stop. So when people talk to me about percentage of account, I couldn't care less. You know, I could have 500,000 in my account, but I still only want 200 quid a day. I work in money. Money is real to me. I understand it. I can see it. When I'm trying to work out position size based on a risk size based on this, to me, it's just, I just can't see the point. Bloody stupid. You know, I work on a basic principle of 50p for every 500 as a rule of thumb. When you've got a small account, you have to kind of stretch the boundaries out a little bit, but when you've got a big account, that works quite well. And also when you've got a larger account, percentages don't really come into it as long as you use common sense, because I am not going to risk 20% of a 100 grand account, you know, 20 grand on something to get 200. That's just being stupid. But if I risk a couple of grand out of a 100 grand account and I get 200, well, I'm quite happy with that. Why? Because it's an investment that grew by a reasonable amount. Now, when I move over next week, start showing you a little bit about crypto, that is how that market works. It doesn't work on price per point or anything like that. It works on an amount of money going into the market, and you look to get X amount of money out of it for that investment. To me, that makes perfect sense. So I'm on the same hymn sheet as that. And why does it make sense to me? Because I come from a business background, and that's what business is about. Business is about ROI, return on investment. Simple stuff. So let's flip the screens over. Now, I've had a little bit of a rant of sorts, and we'll see if we can make some sense of it. Now, I've already done a breakdown of this. I've already shown this sheet to the scruffs. They see it every morning, and if I just pull up what we're talking about, again, I like to put my money where my mouth is. Trade idea, which is pound JP, which is what we're looking at. And it was put up before 11 o'clock this morning. It's now currently crouching 11:15. So it's in the moment, and the guys can trade with me because they've seen this before I've done this trade. To get the way it works around here, gets posted in the Forex, because this is going to be a Forex, but also if it gets lost in the chatter, then come down into ideas of the week, and the current trade idea for the day is here. And also within it, we populate our key levels, etc. So again, everything is there. And then upstairs, it's all broken down into certain areas. So it's fun and merriment, proper trading talk all the way down. I put the strengths in every morning. This went in at, as you see, it's the sheet I've just shown you, went in at 7:45 this morning. Bias sheet went in, well, the last one went in at 11, but the first one went in at 7:50 this morning. So again, I know what I'm looking at. And to me, this is fair. This is the way forward. So let us have a look and see what it is that I'm trying to achieve. Now, yesterday I used 100 MA. So if we put a moving average on, set to 100, we'll thicken that up. We'll just change the color a little bit. We'll have it blue today. So that's the first thing. And we also were looking using a pivot point. This is the daily pivot point. Now, there's no point looking at a 5-minute chart to get a trade on. And what I mean by that is it's too zoomed in to get a picture of the market. Zoom it out to the 1 hour. Right. Now, this is a different kettle of fish. All right. This tells you a different story. All right. Now, as we are working our way through this, and I just want to quickly switch off the noise. I don't know if you can hear it buzzing in the background, but they'll be at it all the time. Right? What is it showing here? Well, if we're using a daily pivot, we can see that it opened above. It has had a screamer up to the R3 beyond. So that is pushing the boundaries of where this can go. And now it's selling back. Where will it sell back to? Well, its next point is this moving average. Now, we've already got an entry point here, and we've got exit points here using the pivot. Now, we can tighten this up into a 4-hour so we can see what's going on now. And again, it's pulling back to the pivot. All right. So over the next 4 hours, so here is a reasonable target. So that's 16. You can get probably 10 pips into there, but I think it'll push through and try and get to this moving average. So today, if we just squeeze this out, if it's coming down to the main pivot, it's down here, and the 4-hour pivot is up here. All right. So what does a pivot do? It just gives you points of attraction. That's it. They're not really triggers. So from here into there is a reasonable trade, although it's a bit tight. But when it breaks that down onto there is a good trade. So that's a good thing. Now you can combine these with other instruments. So for argument's sake, you can use a fib. So you can see the start of the move there, and it got up to there. It's broke the 23 and it's pushing to the 38, which ties in with this. And the 50 isn't too far away from that moving average. So this is a good contender. So drop it down to a 5 minute. The moving average doesn't really matter much anymore because I'm looking to get in based on the hourly. But what can I put on? Well, yesterday I used a MACD, so today I'm going to use a MACD again, just to show you. And the MACD is heavily pushing down, adding weight to the thought process that this can go down. So if I look to get in around here to move down, that would be a good trade. So let us see. So we'll drop that in there. Fire. Order placed. So we've got a short sell on, which is just triggered based on that entry point. And we can see the next pocket of air is here. Very, very simple. So just move that out the way. And as long as that stays in that sort of scenario, we are good to go. So if I just flip this back slightly, and you can see what's happening. Well, there's the 50 line. So if we assume that's the next stall point, just to give a little bit of room for the spread, we'll just drop that to there. Get rid of that to tidy things up. Get rid of the MACD because I use that as a trigger, not a way to get in. And we'll let it run out. So what was the catalyst here? Well, it's actually an extreme of the market. It's above the R3. It's rejected that level. It's pushing down aggressively. So as soon as it came to this level and broke it, it became reasonably valid. And then it's just pushing down to a reasonable target point, which is the 50 of a Fibonacci extension, based on this aggressive move moving up. And it's probably going to move from there to there. So what you can do is you can put a little line here, just like so. And that can be your first take profit, and that can be your maximum target. Simple stuff. And if you want to pound average into this, well, it's from there up to that level there, and we're good to go. And that's how you hide your stops as well. You hide your stops over the top of a major swing point. Now I like 2. So in this instance, there's 1, there's the other. So it would be up there. Why 2? Because it'll test 1. If it tests the other one, I'm wrong. Simple stuff, guys. Simple stuff. So I'll let this run out and we'll see how we get on. Okay, guys, this is risk-free. It's coming to target, and it's kind of pushing down. Now, number of things we can do at this moment in time. I've split the target in half. If I move this out to the hourly, and we can see what we're looking at. There is the first target point, which was the 50 retracement. So if we move that out the way, and what we were left with was the pivot, using this as a secondary target, which is here. Now you can see the collapse. Now this is the next stall point, and it's oscillating a little bit backwards and forwards. So how do you manage it from here? what would you do? Well, if I'm monitoring on a 5-minute chart, which is here, I have this as risk-free. It can't do anything. And I'm going to trail the candles down. All right. And that means just stay behind the candle. All right. Now I'm going to put the MACD back on because I want to have a look at it. Well, the pressure is still down over. Yes, there is a little bit of a move up here, but this section is showing it's pushing down, so it's still valid. So it's either going to stop itself out or you let it run. If this started to converge and touch, I would just kill it out, stop it. For this exercise, it's just, well, it's being paid. If we have a look here, 66 quid. There's the 138 we did yesterday. I can pull this out now and have a reasonable profit, or I can just let it go. Let's see what it's trying to achieve. Now, on the hourly, if we are counting down the hour, this is still pushing heavily to the downside. And a little trick to help you sort of stay in a trade a bit longer. I don't need that. I often switch bits and pieces off because I like to work on a clean chart, and as people know, I go from zones to zones all the time. Once I'm committed to it, that's the bit I'm interested in. You know, let the price kind of do its thing and then manage the price. And yeah, I carve things off backwards and forwards. But again, I'm not here to be a hero, guys. I'm here to be paid. That's it, period. And if I'm taking 50 quid off the table, well, that's a quarter of the way to my overall target of 200 quid. You know, I don't want to hang on if I think the market's going to turn. I might as well take the 50 quid, reevaluate, enter the market again, get maybe 100 on the next trade, and then I'm left with one trade and I make a choice. Do I dare go back to the market for the third time? Or do I just call it even and just say, well, today was 150 quid? That's the way I think. And that keeps me consistent because I'm not chasing the markets all the time. I see it over and over in the forums, and I know you hear me talk about it. And there's a couple in the 5%ers, they're complete morons. They really are. They talk about these wonderful schemes, but they've never made a penny in their life, not one. But they'll berate you and they'll have a go at you, and you're sort of thinking, it's stupid, silly, you know. Like I say, I call them barstool managers. And you often, well, I'll let you go through the videos. You can find out what a barstool manager is. But what I'm driving at is trading is about one thing: growing an investment. And your investment is your ROI. And your ROI is the money you have in the market. Now, if you grow that by X amount, that's a good trade. And then the little bit that you've grown it by, in theory, should be able to pay you what you need for a salary. And if you can't get your salary because your account isn't big enough, it should be growing as an investment, just like what you would be putting in a bank account as savings. It's my take on it anyway. So let's have a little look at this. And I was going to say there's a little trick. Well, if you're watching a 5-minute chart, these are dancing around. It's going green, it's going red, and it can spook you out a little bit. So on this, on a fast market, the DAX, cable, pound JPY, I use a 5-minute chart to get in, fine tune. But to monitor out of it, if you step it back one and just watch it on a 15-minute or even an hourly, That'll help you stay in the trade that little bit longer. And all you need to do is just put your focal points in, like where you're happy to get out. If it's wrong. Now in this case I'm pulling stops in, so I'm letting that get to there, and that is my exit point. And that exit point was based on the pivot. Simple stuff. And then just let it run. And then you don't have to sort of panic over each individual candle. You're looking at a single candle, which is red. So in your mind, it's still going in the direction that you are setting out to get. Job's a good one. And then pick your toys up, like what I would do. Get my little Star Destroyer out here and start playing with it, like the child that I am. You know, if I don't fancy me Star Destroyer, I'll get a little bit of Batman and whiz that round me desk, and if Winky's here, I'd play with Winky. Or you can sort of get yourself onto YouTube and watch some fantastic music videos, whatever it happens to be. Let's have a look, see what have I got at the minute. Oh, classic. Classic. Can it beat this? Most of you youngsters won't know who these are. The Moody Blues. Fabulous. Absolutely fabulous. And talking of this sort of thing, I have various different mixes in here. This is my meatloaf mix. Why do I like this? Look at the length of the song. It's 8 minutes and 13 seconds. Fabulous song. But why is that important? Because if I'm looking at a 15-minute chart, as I've just shown you, if I listen to that right through without looking at the chart, I've wasted, well, 8 minutes, 13 seconds. Once the song's over and I've had a bit of a sing-song, I can then look at it again, and it's probably done a half-decent job. I hope that makes sense. Now, it looks like this might clip out. It has. It's just clipped out now. So there you go. Could have had a lot more, you know, but I don't need to trade the rest of this week. My wages is fully paid. I just wanted to show you something in real time, and well, it's all right. It could be better, but it's not bad. All right. So there you go. Give me your thoughts. I'm always interested to hear them. I genuinely am. And it doesn't matter whether you agree with me or disagree with me. It's just, I want you to be inspired with your trading. And if I can get through the message of less is more and structure your trades in a certain way, then this channel's probably worth it. And if you think it's worth it, do click a like or a thanks, and I'll keep on doing this for you. And likewise with your requests, keep them coming, and I'll do my best to help you. And if you want to see further, well, basically exactly how I do it, because YouTube will always be a snapshot, drop into the Scruffy Squad and you'll see it pretty much every day. So as always, guys, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.